Hello, this is James Smith at gananalysis.net. That's the website. Today we're talking about meta platforms. Used to be called Facebook. And the 52-week cycles, that's the focus of this particular chart. If you anchor from this low here in March of 2020, notice you go 52 weeks into low, 52 weeks into low. Now, there's no guarantee that this will be a low. It could be a high. But some sort of turn is likely in March, mid-March of next year. You also have, note here, 78 weeks down from high, which is 1.5 years, 156 weeks from this low, that would be 3 years. So, it does appear that that'll be an important turn. If it's still going down, maybe that's when it bottoms. No guarantee. Like I said, it could sell off and then rally back to form another lower high and then go down. One of the mistaken views that people have is that because they think, oh, well, this was a low and this was a low and this was a low, this has to be a low. It doesn't have to be. It doesn't always work that way. So, you get these 52-week cycles. All you can really say with certainty is some sort of turn is going to happen. As you get closer to that next cycle date, maybe you'll have a pretty good idea what it's going to be. I think it's possible. Now, this is not a forecast. It doesn't have to do it, but it's possible it could go all the way back and retest the September 2012 low at 1755. This dotted green line would mean you'd have a double bottom with the 2012 low. That's because I'm an optimist. Some people might argue at this point that, Meta is going to go to zero. I don't know that they'll go to zero, but I wouldn't be at all surprised to see them go down to 1755, retesting the 2012 low. It's possible. Now, you can argue, well, this is all fine and good. You're just telling stuff after it happened. But if you send me an email request to jamessmith at gananalysis.net, I will send you the reports that I did earlier this year and even last year to show you that these are not new charts. I had these charts available to clients last year. I warned them that, hey, this is a square of 90. We're using a scale of 2 points per month. That means that the one by one, the red line, is rising at a rate of 2 points per month. And every other line is a derivative of this line here. So the 1 by 1 determines the 2 by 1, the 1 by 2, etc. Now, we completed the square here and you had a low. And then you whipped all the way up 2 squares. So this is 1 square. This is the second square of 90. And that gave you the high. So I was warning clients back here that this could be a high. And that the first 1/4 division of the second square over in time was likely a lower high. You might not believe that, but anyway, if you decide that you're interested, I can send you some of those older reports. I did see a YouTube video where some fundamental analyst was saying, wow, wouldn't it have been cool to predict that, Meta was going to sell off in 2022? Well, guess what? That's exactly what I did with clients. And the reason I did that is simple. Here's what I said before the slide. Facebook has the dubious distinction of being the FANG stock that is likely to underperform all other stocks in tech land. This is a beautiful pig of a stock. A dip to 123 to retest the December 2018 low is very likely, but I'm not at all certain that the selling will stop there. That's what I said before the slide. Now, how is it that I was able to determine that Facebook or Meta would be the big underperformer? Well, here we have the 1 by 1 line that gave you the high in sync with a 52-week cycle. With GAN, you always look at time and price together. It's called the geometry of time and price for a reason. GAN always repeated the notion, time and price. Time and price. When they come together, you get a change in trend. So 52 weeks from this high to this high as you're testing a 1 by 1 line. And note here, the same 1 by 1 line, you dipped below it, came back above it. And then when you broke it here, boom, all hell broke loose. Here's what I said to clients. Soon Facebook will test the 1 by 1 line at 285. A close below this key support means that it's headed down to 123 to retest the December 2018 low. Of course, we went below that, but at that time, it would have been good to get out of this stock. Now, it's called Meta now instead of Facebook, but, back then, I was calling it, we were calling it Facebook. So here we go. Man, this was an incredible slide. Why did it do that much? Because you broke the 1 by 1 line. Note, if the 1 by 1 gave you the high, you had to assume that a 1 by 1 would be important support. It was. We broke it, and this is what happened. So now you know a little bit about how it works. Note this says 13. 13, what does that mean? 13 weeks. It says bars, but it's actually weeks. So because we're looking at a weekly chart, we count 13 weeks from the high of September 2021 to the lower high. And a lot of you GAN students know 13 weeks is 90 days. A 90-day cycle is the most common lower high after the high. And the big selling usually comes after that 90-day cycle as you form a lower high into it. Then you get the big waterfall decline. Now, I have lots to say about Google, Microsoft, Amazon, Apple. I have charts on all of them. If you're interested, why not try out the service for a month or 3 months? You go to the website, check the option of your choice, try it out. You'll be able to see all the old reports and see for yourself what I said, what did I get right, what did I get wrong. I don't change anything. I just post it. I've got charts, I've got reports going back 2, 3, 4 years. You can look back and see what I said, see if what I'm talking about now is true. Or if you just want to see Facebook, just send me an email, ask for some old Facebook reports, and I'll send them to you. But I'm telling you, this is something that you could have known using GAN analysis before the event, not after. This is what I wrote. I wrote that before the event, not after. And here we have something else. The square of the range, we're using a slope for the 1 by 1, 1 point per week. So from this low to this high, we project the square forward using a scale of 1 point per week. So this red line declines at a rate of 1 point per week. And when it crosses the level of that prior swing low, we call it a square out. It's squaring time. So basically, that's the completion of the square in time. And then 1 quarter, 2 quarters, halfway, 3 quarters. These are the divisions. We're dividing up the square into divisions of time. So we know May of 2023 is likely to be some sort of turn. It may not be a low. It might be, maybe if we bottom in March, maybe it's starting to move up again. But I would not be surprised to see this stock retest the September 2012 low sometime next spring, either March or May. This 1 quarter division is going to be some sort of turn. We don't always know. Now, here's something I said 9 months ago. A retest of the September 2012 low at 1755 seems likely. So, we're up here, and I was telling people it's going down here. That might seem like a lucky guess, but given the fact that we knew the Fed was telling you it was all transitory inflation, and that last year every word that came out of his mouth was transitory inflation, and even Yellen at the Treasury was repeating the mantra transitory inflation. We knew the Fed was creating a bubble. We knew the FANG stocks were the epicenter of the bubble, and we warned clients when it got up here, you should be getting out. And notice here, the 2 by 1 gave you the lower high in price, and we told you 13 weeks down from high was an important cycle for a lower high. So time and price, 2x1 gave you the lower high in price. 13-week cycle, 90-day cycle gave you the lower high in time. And that set up this waterfall decline. So to answer the question that I'm not going to name the name, but some other analyst was saying there's no way anyone could have predicted Facebook going down in 2022. Well, I beg to differ. Gann allows you to do stuff that other analysts don't even have a clue how to do. We're talking 52-week cycles, and we're talking square of 90, the Gann fan, which is kind of out of date now because we're below this low, but it was very useful at the time, plus the 1x1, and we're talking the square of the range, and a dozen other charts which I could go through with you, but I think you've seen enough for now. And if you are still interested, send me an email, ask for the complete Facebook Meta report that I sent out to clients a year ago. So you'll know when you read through it that this stuff is not hocus pocus. It's the geometry of time and price. It's called math. Try to realize that most analysts are offering opinions, and they don't even disguise the fact that they're just offering opinions. We don't do that with Gann. We look at time and price. We're looking for turning points. We're doing something based on math rather than opinion. Geometry. That's what Gann is all about. So if you get that concept and you want to learn more, think about trying the service for a month or 3 months. If you don't like it, you don't have to renew. If you don't renew, you automatically drop off. So you're not stuck into it. You can try it without a whole lot of obligation. But even if you're not interested to do that, hey, just ask for the free report on Facebook that I did over a year ago. See what you think.